I feel like I should pound the table. This is what I do every Friday. I call this The Dollar is Dead. I do usually 3 episodes a week, but I always do every Friday. We've been doing this back since February of this year to point out that, simply put, there are 3 main things you can do to get yourself in financial shape, or at least get started. 1, get out of high debt interest rates, particularly credit cards. They're over 20%. There's no reason to have 20% interest rates. That's crushing you. 2, have an emergency savings. I've got many videos on this. I'll post some down below. 1, how to just do a real quick back of the napkin emergency savings. We'll talk about that briefly. And when you have your emergency savings, it's in whatever currency it is. If you're in the US, it's US dollars that you need immediately to pay bills. If something, God forbid, you lose a job, or someone in your household does, or everyone does. And the third thing is, for the money, the dollars over and above your emergency fund, you do what the rich do. You don't hold that in US dollars sitting in a bank that earns 0 interest and inflation drives down its value. You purchase assets. And I'm going to show you the assets that we follow. It's a diversified portfolio. It's real simple because everything I'm going to show you can be bought simply through an ETF. If you want to dive in and do even more than that, great. But this is a simple, straightforward strategy. I always have to say, I'm not a financial advisor. I started this channel to help people get out of debt and to help them preserve and create wealth. So let's get started. First off, we're going to go through all 3 of those things. But first, just take a look at recently in the economy itself. This article talks about inflation hitting 2.4% in September, and a little higher than they expected. Jobless claims highest since August of 2023. What does that mean? Well, things are still getting more expensive. Remember, inflation was high just a while ago and it never went back down. So those elevated prices are still here, and then they're still continuing to go up. Jobless claims. Amazon says they're going to cut 14,000 manager high-paying positions. Remember, high-paying positions, money trickles down. That's going to affect all kinds of people, restaurants, you name it. CVS, I think, just cut a couple thousand, 3,000 workers in cost-cutting move. So what does all this mean? It means that prices are going up. People are losing their jobs. That could happen to you. That's why we talk about emergency savings. And in the 2 videos I have, one just does a quick back of the napkin. But generally speaking, if you spend $4,000 a month and you want to have 6 months of emergency savings, that's $24,000. You might say, well, that's a significant amount of money. So I've got another video that shows you how to make that last even longer and what you can do to prepare for the situation that hopefully you won't find yourself in, where there might be job cuts. With the Fed lowering interest rates, they're doing that. Everyone has their own versions of why they're doing it, but it looks like the economy is not all that great. In the next year or so, there might be even more job cuts. And if that's the case, then you might be more likely to have job cuts. So let's get into a couple things here. We talk about the dollar. And I've showed graphs, and I'll throw it up here just real quick, where you can see when you compare the dollar to gold, the dollar has lost 99% of its value over the last 100 years. In other words, it buys a lot less stuff. If you had gold, you'd be in a much better position. You'd have way more buying power if you converted the gold to dollars now and you've been sitting on it. This is an image of the euro, and this was put out by In Gold We Trust. They have all kinds of information about gold and silver and whatnot. Check this out. 25 years of the euro. The euro has lost almost 90% of its value against gold in just 25 years. Let's just say 24 years. That's 2000 to 2024. If you had taken your euros and you had actually bought gold with it, you'd be in a way better position than the people that just had their euros sitting in the bank and they just kept going down in value because the government keeps running up debt and printing money. Every government across the globe is doing this. All right, and check this out. I thought this was very interesting. This is a post where they said this particular company, the dotted line, they put this out in 2020. And in 2020, they had this dotted line. This gold line didn't exist. And the dotted line is where they said they thought the price of gold would be going. Well, here we are, 2024, and look, the gold price wasn't quite there, but at the moment, it's hitting that dotted line. So gold over time continuously going up. If you saw dollars here, it would be going down. So let's get into what we typically look at. I always start with, well, what if over your emergency savings, you threw it in the bank? So I just look at, here's a savings rate, 0.46. This only updates once a month. We do a 3-month, 1.5, and what if you had treasuries, 5.2? Over the course of a year, that's the rate of return. So what do we really think? Okay. Next, we look at 4 different things, commodities you could put your money into, and then we'll talk about stocks. Gold is at 26.71, up significantly since February this year, you see on the chart. Silver, 31, that's up 50%. The bank was giving you 1%, maybe 5% if you have a significant chunk of money in there, whereas silver would have given you a 50% gain. If you had 10,000 in, you'd have 15,000 by now. At 5%, if you had 10,000 in, you'd have 10,500 by the end of the year, which we're not even at. Bitcoin, Ethereum, whether you like or don't like crypto. So you might think, I don't know how to buy gold and silver. I gotta go buy it somewhere, and cryptos make any sense to me. I don't get it. Well, there have been ETFs created, and they have been for gold for quite a while. Spot ETFs. Go to your broker, log into Fidelity, buy a spot ETF. I'll put a link down to an article I have where I list out gold and silver ETFs. Silver ETFs, Bitcoin ETFs, there's Ethereum ETFs. So you can just buy and sell shares that have spot. In other words, they're buying in a proportionate amount of that underlying asset, whether it be gold or silver or Bitcoin or Ethereum. Very simple strategy to implement. Just go buy 4 shares of 4 different spot ETFs, and you're now exposed to gold, silver, Bitcoin, and Ethereum. You turned your dollars into assets. Sure, when you log in, it's going to say the value in dollars, but you don't have dollars. You have gold, you have silver, you have Bitcoin, you have Ethereum, and if they're going up faster than the dollar, which they have been, especially gold and silver has been around for a long time. There's a long track record of over time, it goes up more. It's what the rich do. They buy assets. Okay, now let's look at Dow Jones. It's 30 stocks, as you know. This is a chart of a year. Look how much it's gone up over the past year. 26%. S&P 500, 500 stocks. It's gone up 32%. Of course, these things go up, they go down, they go up, they go down, but over time, they go up and to the right. So what I do is I have money that I don't need in emergency savings, and I convert it to things. Again, the Dow Jones 30, there are ETFs. In the S&P 500, there are ETFs. And there's many books written, I've said this so many times, about if you just don't want to get into stocks and you want to simple set it and forget it, the S&P 500, it's been shown over time, is hard to beat. There's even money managers that can't beat the S&P 500 over time, its returns, because it's exposing you to 500 stocks. Imagine if you had to go out and buy 500 individual stocks, pain in the butt. Here, buy a share of this ETF or however much you want to buy. Now you're exposed to all 500 stocks. Over time, you'll be better off. All right, now let's look at, I always look at inflation. 2.4%, we went over that. It was in that CPI article about the cost of goods and what they are. And people say, well, it's only 2%, that's not bad, blah, blah, blah. Well, these prices went up just a couple years ago, up to as high as 9%, and I think it was even more. These prices haven't come down. So in other words, those $30,000 cars that went to $40,000, they say, well, inflation's only 2% now. Okay, it's still at 40 and still going up. It hasn't, that jump hasn't been eradicated. So things are still expensive. You know this, we all know this. Forget what the media is telling you. We know that those prices went up, they stayed up, and they're not coming down. To come down, it would have to be 0 or below. Okay, then we look at the 2-year and the 10-year treasury. 2 years about 4% almost. The 10-year, which should always be above the 2, because you should be getting a higher return if things are going well in the economy, and it now is. Lastly, we always look at the rate of what they call inversion. You want it above this black line, which means the longer term 10-year is more than the 2. We also look at the 10-year because that's more directly correlated to the 30-year mortgage. But it was underwater, meaning the 2 was paying more than the 10 for quite a while. We've shown this before. You go back over time, these gray areas are bad financial times. And look what happens before each bad financial time. I'm not saying it's going to happen again, but look, it's inverted, it comes out bad finances. Inverted comes out bad financial time. Inverted comes out bad financial time. We were inverted, we just came out, uh-oh. So Get rid of high interest rate credit card debt because you're just losing money. Have an emergency savings. Make sure you've got a budget so you know how that emergency savings will be applied. Again, there'll be links down below. And then for whatever you've got over and above that, in my opinion, I diversify. And if I want to get into things easily, I get into ETFs. I do much more than that. I've got videos on it. If you want to actually buy physical gold or you want to buy and hold your own things like Bitcoin and crypto, you can do that as well. But my advice, get out of high debt, have your emergency savings, and for long term for you and your family, and so you don't lose buying power with currencies like dollars and euros, because governments keep running up debts and governments keep running up the inflation. Because why? They don't care about you. Banks don't care about you. Governments don't care about you. You have to take control of your financial future for yourself. It's up to you to do it. I hope this is helpful. I do it every Friday just to keep reiterating and hitting you over the head with the wealthy hold assets, not dollars. Do what they do. Have a great day. Hope this was helpful.